In this video, we'll talk about whether Realty Income stock is a good buy for 2023 and beyond. So before we start, please give this video a like and subscribe to our channel to receive weekly updates. Let's get started. Realty Income, stock ticker, O, is well positioned to benefit from its portfolio, which comprises of major industries that sell essential goods and services and are less susceptible to economic uncertainties. Furthermore, the company is expected to benefit from accretive acquisitions and a strong balance sheet. This retail real estate investment trust, or REIT, has properties in all 50 U.S. states, Puerto Rico, the UK, and Spain. Most of the annualized retail contractual rental income comes from tenants whose businesses are mostly based on services, necessities, and low prices. Realty Income benefits from the steady income these companies bring in because they are less likely to lose money if the economy goes bad or if online retailers start to compete with them. This dependable company has endured the test of time. Investing in the stock market this year has been a roller coaster ride for investors. High inflation and rapidly rising interest rates have weighed on asset prices. The latest inflation numbers are out, showing that the Consumer Price Index, CPI, rose by 8.3% from August last year, higher than economists expected. There's no telling where inflation or the economy will go in the coming months. However, history tells us that quality companies that pay out dividends consistently can be an excellent source of income. One no-brainer dividend stock you can buy today is Realty Income, the real estate stock that pays investors a monthly dividend. Realty Income has a solid business that can weather economic storms. Here's why the company is so durable. Realty Income's high occupancy rate makes its business dependable. Realty Income is a real estate investment trust or REIT that purchases and manages properties through long-term lease agreements. It manages over 11,000 properties for clients, including CVS Health, Walgreens, Dollar General, and Dollar Tree. Realty Income uses a triple net lease with clients, which makes those clients responsible for taxes, maintenance, and insurance on the properties. This is a common way to lower tenant rents. Rents will go up and Realty Income's financial responsibility for a commercial property with only one tenant will go down. Realty Income reduces this risk by dispersing it across thousands of properties. Whereas this leasing model can be risky at the individual building level due to vacancy risk, it is either 100% or 0% occupied. Along with that, most of its largest clients have credit ratings that are regarded as investment grade. What makes Realty Income special is that it has maintained high occupancy levels on its properties for over 25 years. Going back to 1998, Realty Income has had a median occupancy level of 98%, outpacing other REITs in the S&P 500, whose median occupancy is 94% at the same time. How does Realty Income select its properties? Even during the Great Recession of 2008, when real estate and other assets took a lot of damage, occupancy rates have stayed the same for Realty Income. The REIT takes advantage of the fact that it has been in business for 53 years and is careful when making lease agreements. For one, the initial lease term is longer than average, at over 10 years. A longer initial lease term helps Realty generate more reliable cash flow over time. Another attractive feature is that nearly 86% of its leases have built-in rent escalators tied to inflation or fixed increases, which can also make this an attractive inflation hedge. 2. Realty Income can use its huge amount of data to analyze opportunities, both new and old, that look good. The company whittles down its investment opportunities by looking at long-term industry trends that show the businesses it leases to are sustainable. It also looks at the locations of its properties to make sure they have good qualities, like being close to big cities. For example, 85% of the population in the US lives within 3 miles of the company's pharmacy clients, CVS Health and Walgreens Boots Alliance. Walgreens wants to build 1,000 doctor offices by 2027. This gives Realty Income a chance to grow as its clients do. A safe dividend stock you can count on. Realty Income concentrates 84% of its portfolio on retail properties. One way to manage this risk is by diversifying across industries. It has the most exposure to grocery stores, which pay 10.5% of its annualized rent. Convenience stores and dollar stores pay 9.2% and 7.4%, respectively. This diversification and its strict selection process all add up to Realty Income being a dividend stock you can trust. For 27 years, Realty Income has been a dividend aristocrat for years because it has increased the dividends it gives to investors. The company's dividend payout ratio is 76.5%, which is a safe number that will let it keep its dividend and have enough money to buy more property in the future. With its 4.4% dividend yield and monthly dividend payouts, investors in search of passive income can't go wrong with Realty Income stock. Impressive and consistently growing dividends. It has also reached a milestone by raising its dividends for 100 quarters in a row, and it has raised its dividends 117 times in total. Realty Income is a great stock to buy for investors looking for long-term monthly dividend growth. Annually, Realty Income stock pays $2.98 in dividends, yielding an impressive 5.13%. Its forward-adjusted funds from operations, AFFO, yield stands at 6.96%. Realty Income stock key metrics. Despite the volatile macroeconomic backdrop, Realty Income has continued acquiring properties internationally. In the first half of 2022, the company invested more than $3.2 billion in high-end real estate across the United States and internationally. Realty Income Corporation's rent recapture rates for Q3 2022 were 108.5%, which were pretty good. In contrast, O's rent recapture rates were much lower, at 100.0% and 103.4% for full year fiscal 2020 and 2021 as indicated in its third quarter. Realty Income Corporation has been successful at creating value with its releasing activities, and this is reflected in its metrics like rent recapture rate. Looking forward, O mentioned at its recent third quarter results briefing that it expects to still be north of 100% in terms of recapture rate for the next 6 to 8 months. Robust growth ahead. Realty Income has focused on expanding its overseas portfolio for a while. To that end, the company recently raised its multi-currency revolving line of credit to $4.25 billion and its commercial paper program to $3 billion. This follows the company's acquisition of Realty Incorporated last December, consolidating its position as a leading net lease REIT. Apart from projected inorganic growth, Realty Income is also restructuring its existing portfolio to boost rental income. In the first half of 2022, the company raised its annual new rent on releases by 5.8%. With a potential recession knocking on the door, stable dividend income has become one of the priorities of retail and institutional investors alike. The monthly dividend stock might be one of the best REITs to invest in for the long term as the market backdrop becomes gloomier. Its historical performance and strong balance sheet should allow it to withstand an economic downturn with ease. What is the forecast for 2023? Wall Street analysts expect that Realty Income Corporation will achieve decent financial results for fiscal year 2023, although O's performance next year isn't expected to be as good as it was in fiscal 2022. Realty's adjusted funds from operations growth is projected to moderate from plus 8.5% for fiscal 2022 to plus 2.9% in fiscal 2023, based on the consensus financial numbers taken from S&P Capital IQ. The sell-side analysts also forecast that Realty Income's dividends per share will increase by plus 2.9% in fiscal year 2023, which represents a slower pace of growth as compared to O's plus 4.8% dividend per share hike for fiscal 2022. What do analysts believe about Realty Income? The market's reasonably low expectations of Realty Incorporation for 2023 are also reflected in the change in the consensus price targets for O in recent months. In the past 2.5 months, the mean target price for Realty Income Corporation has been cut by -9% from $77.03 as of September 30, 2022 to $69.94 as of December 12, 2022 as per S&P Capital IQ data. Similarly, O's median sell-side price target was reduced by -8% from $76.50 to $70 during the same period. Is O stock a buy, sell, or hold? We have O stock rated as a buy now. We're of the view that Realty Income's actual fiscal year 2023 financial performance should turn out to be better than what the current consensus numbers suggest. Do you think Realty Income is a good long-term REIT stock to add to your investment portfolio? Let us know in the comments below. As always, it is essential to do your due diligence before committing your hard-earned cash to buying stocks or investing in the market. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.